show the screen and we're ready. Right, so welcome to Tom's Friday session. In front of you, you've got a 15-minute chart of the S&P 500 future. So that's what Tom wanted to start with. So I'll hand you straight over to Mr. Tom Williams.
Thank you, Peter. Yeah, hi everybody. It's Tom Williams here. Lovely to talk to you. Right. Okay, we've got a 15-minute chart up. No particular reason why it's 15 minutes. All these time frames you can look at. Some of them occasionally can be slightly misleading. So you've got to watch it. Although signals come up automatically, you've still got to add a bit of common sense to it, if you can, considering that if the bar is down on low volume, for example, I mean, there was a red arrow came up on one chart, I think it might, I'm not sure if it's this one or not, and it said top reversal. Well, wasn't a top reversal because the second bar down, although it met all the parameters of down, the close low, and the low of the previous, all this stuff, but the volume was too low. There was just no selling pressure there, so it simply said, okay, and it turned around and went back up. So that was an incorrect signal, but you have to watch that. But I will eventually, we've got Gregory, who's the Russian programmer, who's very, very good. Once we get around to it, he'll prevent that by reprogramming that particular signal to tell the program not if its volume is low. Because it can't be, there's no selling pressure, especially in an uptrend. So we do have to be careful. Now this is a 15-minute chart. We can see it's pushing up like hell here. It's been persistently going up. Now, why do you think the price is up here at the moment? I'd like to do what Gavin does, ask the question. Can anybody answer that quickly? Why has this gone up here? Peter, can you see if they're typing anything in? Was there some good news? What was it? Why is it pushing up like this? Why is it up here? Right, Peter says. What that means, I don't know. It's a lovely word, isn't it? Right.
Okay, so I'll read out everyone's suggestions. Eleni says gravitating to 1900. So that was a level, in other words, I suppose. Lewis is saying absorption. Park is saying looks like there's a shakeout at 1400. Tom's suddenly made a noise at that. Supply coming in, no supply. So it could fall on Tuesday. Gravitating again. It's close to closing time. Absorbing supply before going up. So from all those answers, Tom, what's your thing?
Well, one of you certainly got it right. Definitely. You see, nothing happens in the stock market without what we call a cause. There's a cause. Now, not necessarily news or gravitating and gravitational or whatever words you were using there. But the reason why that went up was one, somebody got it right because look, lo and behold, it's a springboard. Here, look, shakeout. That's a beaut too. Well, it calls it a basic test. Yes. Well, it's more than a test. That's a springboard. That's a shakeout after a sideways movement. Next bar's up. Okay. That's why we've got this move. Whenever you see those, these are so important. And I'm always stressing on you look at the background. Markets don't just go up. They have to have a cause, a reason, which attracts the professional side of the money to throw in their thousands of contracts and make these things go up like this. Okay, so I thought that was a bit interesting. There's a red arrow here. It's probably what, no demand, Peter, is it? Right, well, it's not quite right. See, the trouble is, the reason why it's not totally correct, that was because the volume's not high enough. End of a rising market, right, you're going to see an up bar and a narrow spread. It'll probably gap up on some good news. But the volume will be horrendous. It'll be huge. It'll be massive. Then you get end of a rising market. But that more or less almost looks like no demand down here, look. You look at the volume here. But don't forget we're talking to a computer here. And you have to delve in occasionally and say, look here, mate, you've got this bit wrong. Now, these red down bars are giveaway usually. It's a red down bar, look. Okay, we can see it's down on a narrow spread. Let's look at the parameters if we can. Down here, look. Here we are, it's down bar, look. So volume is high, spreads average, close low. Right, so that's not too much information, but when we look at it, look, we can see it is a red down bar. Next bar's up, look. And the volume is well above the average line, I suppose, so fair enough. But there must be some weeks. Look, there's a test there. That black bar, look, is a down bar, and look how low the volume is. Low volume is volume less than the previous two, look. And that's why it closed in the middle, right? They tested the market. There was no selling pressure. That there will be no demand, look. That'd be a test of that. Whenever you see a red down bar, narrow spread, close in the middle, volume fairly low, after these no demand red arrows, that usually means it wants to go up. Now it's a 15-minute chart. I'm not sure where the top trend line is, Peter. Yeah, let's look at the top trend line. Yeah, so it's pushing up, trying to reach that top trend line. It's highly unlikely to go up through that top trend line. But you do have to watch it, as you realize, of course. They're very devious and that, but you have to have a cause for these things to go up like that. And we pointed out the cause on that chart there. What was that? Now this is a daily chart, look. Now, there's the trend line, look. So it's not far to go, look. Now, why did that go up? Because look, there's stopping volume here. It's not a good example of stopping volume. What's that signal say, Peter? Strength coming in. Strength has arrived. Rita's here. Hello, Rita. Good. Anyway, you saw these red arrows last week. Okay. Market fell, look. But as it plummeted down, there was little or no selling pressure. And on that lack of selling pressure, it closed well off the low. And these bars are up. That's the first red down bar we've seen. The volume is low, look. You do have to wait until these bars are finished. Actually, I made a bit of a horrendous mistake day before yesterday. The mistake was I was looking at the 30-minute chart, and sure enough, it went up and there seemed to be huge supply. Went off a few bars, then started to go up on no demand. And then it suddenly leapt up, and it looked, I was looking at a 30-minute chart. It looked exactly like an upthrust. Right. Well, in fact, when I was looking, it was an upthrust. I spoke to Gavin about it. I hope he didn't take any notice of what I said. But what happened was that the bar hadn't finished. As a matter of fact, only half finished. But the time the end of the bar closed, finished, it wasn't an upthrust. It was not an upthrust. And what it was, that when you see a bar, an old saying says, it tries to go up, tries to go down, and closes in the middle, that means that they're testing the market on the upside and the downside. If the trend is up, it's probably likely to be support on the lack of selling on that downside. And of course, it's started to go up again. So I apologize for that, anybody who was listening to that. But that's a mistake that we always preach, and I always preach. You should not do. You have to wait till the bar finishes what it's doing, and then you analyze it. Because suddenly these things can change horrendously fast. And you can wonder, where things have gone wrong. But we can see it's trying to push up here. It'll probably hit that top trend line today. They are a bit cunning and dubious on a Friday, so we do have to be careful. That's a daily chart. It's pushing up, look. There's the top trend line. Now that's the 15-minute, we were looking at that. Now, do you have any questions about this 15-minute chart, look? Or any chart, please. Rita's here, eyes glued to the other computer screen. Ready to read out any questions or suggestions.
Rita's still logging in, so let's read a couple of comments or questions here. So T.P. King says or asks, you said it's likely to not go through that trend line. Why?
Are we talking about this?
No, on the hour at all. You said, well, probably won't go through the trend line.
Well, I'm just speculating, really, quite honest, because trend lines do work. They do offer great resistance to higher prices, and it's lurching up there now. It could easily become overbought, I suppose, easily. And the reason why I said that was because to the left, you've definitely got weakness here, look. So to go up through that here, it's got to push up through this weakness here, and it's confronted by this top trend line. That's why I said it's highly unlikely to go up through there. Of course, as we all know, it can. So again, I'm kind of analyzing before the event has happened, look. So you have to be careful, very careful. But that, I'm not trading at the moment, but if I was trading, that's what I would think. I would think, yes, it may go to that top trend line. It's highly unlikely to go over it because you've got this weakness here, look. Plus trend lines do work, and trend lines offer a severe resistance. Don't forget, we're not the only ones looking at trend lines. They're used frequently by professional players who've got huge amounts of contracts in or out of the market. And they simply can't get it wrong. There's just too much money involved for them. Does that make sense?
Yeah, Edmund says on the 15-minute bar, the 230 bar is an up bar with high volume closed well off the high. With the springboard in the background, would you be bullish or bearish at that point?
How long ago? What was the question?
So here we had a shakeout.
Yeah.
The market opens. It closes in the middle. With that shakeout in the back.
Now, when you have these shakeouts like this and the springboard behind you, this is overwhelmingly powerful. And this high volume here will be absorption volume. You're right, there is high volume. But because they're so bullish and they've seen this, they've done this shakeout, they've caught all these stops, they've shaken loads of people out. Okay, so that creates a demand in the market. And then this is really absorption volume, pushing up through this to the left here, which we can't see on this chart. All right, it's gone up. It's closed in the middle, that's fine. And the volume is high, that's absorption volume. But the reason why you call it absorption volume is because of this. This is so powerful, these springboards come shake out, or test as the computer thinks it is, right? All three interpretations are really correct. Yes, it would be nice to see a red down bar here confirming it, but there isn't. But that is what that is. That's not supply, that's absorption volume because of this. This is overwhelmingly powerful here. There. And that's the reason why you know that's absorption volume. Pushing through this high to the left, look. That's what's pushing through all this, look. Okay. Is that clear?
Steve is asking, Tom, would you say the longer the sideways movement, the stronger the breakout when it happens?
Not necessarily. That's the problem. We have no mathematical calculations whatsoever, which that interpretation would need some sort of mechanical, mathematical interpretation, wouldn't it? you'd have to start naming a number of bars it goes sideways. I mean, we can't do that. All we can do is pick the information up from the price action and the volume. I've seen markets get very, very strong after 2 or 3 bars. But it was clear by looking at the high volume down bars and then lack of volume. So no, you can't expect any logical correct analysis from any mathematical formula, because you're dealing with human beings and they're an unpredictable lot, and you'll just be hitting your head against the wall, as they say. You've got to analyze the amount of volume from that. But this is definitely a shakeout, look. Wyckoff, I think, called that a springboard. Right, and that is so powerful, look. And don't forget, we've seen strength in the other daily charts and whatnot. And that's why that's absorption volume. That's absorbing any body. Actually, if it goes sideways for a longer period, then you get more and more traders locked in there. And more traders don't like this when they see this market fall like this. They think, oh my God, look, I'm wrong, I'm losing money. And a lot of them will bail out. A lot of them will panic and start selling as soon as it starts going back up again. If you're professional money, you know automatically how the crowd will behave to these moves. And that's why you get this down move like this. They know exactly what that'll do. Exactly. That's why they do it. And then this here, they know it's bullish after this shakeout. So this has to be absorption volume. It'd be nice to see a test, a red test, but in this case there isn't one.
Okay, Roger would like to look at the Nasdaq 15-minute and the daily. Yeah, got 15 minutes. What should we look at first?
I'll look at the 15 minutes.
Okay, that's Nasdaq 15 minutes.
Future. Yeah, well, again, look, we can see the reason why this has gone up, because look at this hell of a shakeout here. But they whipsawed the market, look, which is a bit tricky of them, look. They marked it up, spun around, and then did a shakeout, or springboard, look. Now, this one is tested, look. If we bring the cursor back here, look. Red down bar after. Now, what did the computers tell us about that? Is that it? That's it. Right, hang on, sorry. Here we are, look. Down bar, volume high, spread average, close low. Right, it doesn't give you too much information, but it is a test as far as the professional money is concerned. They say it's high volume, but when we look at it, the computer only looking at it because it's above the average line. But you can see, in actual practice, look, it's low volume, look. Low volume, although ignore that average line, computer's looking at that, but we can see it's low volume relative to the previous volume. Don't forget we use relative volume. Look, that one and that one, this is obviously much lower on this down bar, look. That's why it was a test. Add the next bars up, look. Okay, so this is the Nasdaq. So you've got this shakeout here, or springboard. It's tested, look. Up it goes. Probably no demand, look. And first, no demand, look. Now, lo and behold, that looks as if it's tested, look. It's a volume low. Yeah, there you are. That is immediate test, immediate sign of strength. After you've seen a no demand, red arrow, look, the next bar is down, narrow spread, close in the middle, volume less than the previous two. That means, yes, I want to go up. I've seen the no demand, but we're just testing, check. And up it goes. There's another red arrow here. This one's probably what, no demand, Peter? Right, and even that black bar's a test, look. It blacks is closed in the middle, closed at the opening of the close of the previous bars. That's why it's gone up, look. So if you want to do a bit of scalping, if you look out for these no demand up bars with a red arrow, followed immediately by a red down bar, narrow spread, close in the middle or high, volume is less than the previous two, you know you're going to get higher prices. But here, you've got this fantastic shakeout, look. Comes springboard. You can see how devious they are by whipsaw in the market, look. But that's why that went up. Just the same as the 15-minute, but this is far, far more obvious. What was the other time frame, Peter? Daily. Well, that's the 15-minute. Right, NASDAQ daily chart. We look at the low here. We've definitely got something here. Test. Right, fair enough. Up. Looks like other testing going on, look. These red down bars, if they're on lowish volume, for example, that one, Peter, is that less than the previous two? So that's low volume, relative, low volume. That means it's going up. So what's interesting is that you can read these bars, and it more or less has to follow the laws of supply and demand. And that's all it's basically doing. The market follows the path of least resistance. If there's a bullish move up and then suddenly turns around and it goes down for 1 or 2 bars, and you see the volume is low, then you know that there's no selling pressure. If there's no selling pressure, it must mean that demand must be greater than the supply. And that's how it works. Very few people in the world, relatively speaking, know that. You never get told that. I've never heard it on TV or anywhere, really, that I know of. Maybe leaking out now after a few years of this, I don't know. But when you see it, you've got to believe it. You've got to look at the facts and say, right, well, this market's telling me, look, there's no selling pressure. That means it wants to go up. If you can get your head around that and actually commit yourself to that as it happens, you'll be all right.
Okay, thank you, Tom. Anybody got any questions or charts for Tom to look at? Please type it in the questions box. This is a 15 minutes of the S&P future. Just finished this moment as we switched over. As Tom says, it looks a bit like an up thrust. Tom says it's what we call a weak bar. Right, let's see what requests we have. So Leslie's asking for EPI. Let's see what that is. Now, if we have EPI, it'll be a daily, end of day, up to date to yesterday. Looks like we do. So what do you think of that, Tom? EPI, I'm assuming it's a stock, I don't know. Yeah.
Well, never quite sure these charts that gap around like that. Can't be Indian Stock Exchange. I was told years ago the Indian Stock Exchange is the most corrupt exchange in the world. So be careful. That's what I was told from somebody who's supposed to know. Well, because I can't see all that well, but it's obviously hit the supply, look. Yeah. See, it seems to be moving around with the index, the S&P 500. Exactly, look. Yeah, I believe you. Yeah, I bet. Can we get weekly? Oh, that looks better. Wisdom Tree. Wonderful name. Well, it's obviously hit a bit of supply here. This is a weekly chart, look. There's your high volume. That's brought that red arrow in. Supply, which is correct. Up bar, narrow spread, look. Follows up bar, narrow spread. Seems to be hitting the top trend line somewhere. That's there's not enough information there to give any proper analysis. It just means that red arrow will probably knock it sideways at the best, and it may even drift off a bit. Okay, it's a weekly chart. There's definitely supply there, look. There could be a certain amount of absorption volume, look, as it pushes up through here. It's not clear, there's not enough information there for me to give a proper analysis. Yeah, that's moving up with the index. Interesting.
Edmund is asking for us to look at CREE.
Well, that to me looks like sudden weakness. That last bar, look. That's what we call a weak bar. That was yesterday. But on saying that, there is a shakeout look here. No supply. It's moving up with the index. Those red down bars, I'm never keen on them. They've got these what we call top tails. In other words, a high is a lot higher than the high of the previous bar. That means it must have gone up there on a shorter time frame on no demand. This looks weak. Strong markets don't normally go up on high volume and close in the middle. I certainly wouldn't be interested in doing anything with this particular stock. Although you do have a shakeout, so there must have been some buying here. The buying, of course, was here, look. There's the stopping volume, so there must have been some buying. There's the test. Come shakeout. Here, look. Up. This looks slightly weak bar, and that looks definitely like a weak bar. Okay.
There's a comment here from Jerry. You listening, Tom? Tom, I recently got accepted into 3 proprietary trading firms and studied all their master courses, and they had no idea about VSA. They were simple breakout traders. You are so correct that even some of the professionals don't understand your concepts. They were horrified when I told them some of your concepts of when to get in and out of some trades. Got anything to comment there, Tom? Now Tom says he knew that this all goes on. Yeah. Okay. Thank you, Jerry. The pound, Peter. The 1 hour and 4 hour charts for Louis. And Robert on that same subject is saying, do you think that the pound is weak?
Now it looks like some strength has appeared. Don't forget, this is for scalping purposes. Why? Because we appear after we've seen a fall, look. Right, if we see very high volume on down bar, it's closed off the lows, look on that. Next bar's down on a narrow spread, closing near the high, and the volume low, so that we have to assume there was buying there. So this looks if it wants to go up. But we're talking about scalping here. We're not talking about going to the moon or anything. But you would expect higher prices now. Be it may only be a 50% retracement. But right now you would not be shorting that. And if you were short, you would be covering that position, I would have thought. Because that, at the moment, is showing signs of strength. Put the other chart up, Peter. 4 hours. Ah, well, yeah. We've seen this before, haven't we? Look, these are signs of weakness, look. When you see these are definitely, it's not an upthrust, that is supply hitting the market. What's that say? Yeah, well, that buying climax means supply. Okay, now, this is confirmed here with this upthrust, look. This is definitely an upthrust. Trap up moves, the same thing. They mark it up. They know the market's weak. They mark it up, mislead as many traders as possible, catch as many stops as possible. Right. Fall on the low, rapidly on the low. Then they're usually quite crafty in a way. The market then starts drifting up. So you may think at that stage that you're wrong. It suddenly turns around. Look, that's on no demand anyway. Turns around. There's not a lot of evidence on this particular chart that there was buying coming, which we saw on the hour. So that's horrendous weakness in the background there. So even if we saw a rally, it's not going to go up through there anyway. It's highly unlikely to go up through there unless you get a really good cause built. In other words, the market drops quite heavily. You see massive volume as they move in, stopping volume. Then they test it, then it might go up through there. But this is horrendous weakness, look.
Whilst we've been talking, John's saying the ES 15-minute appears to be rounding like a mushroom. Would you perceive this to mean weakness?
Well, it certainly looks weak at first glance now, doesn't it? I mean, you've got an up move from this shakeout. Right, so that makes it, simply gone up makes it vulnerable to want to come off. But it hits 1, 2 red arrows here. It is rounding over, look. And lo and behold, we have what looks like an upthrust. That's what we call a weak bar. So that doesn't look as if it wants to go much higher at the moment. But I can't see any horrendous weakness in the background. That's the problem. Most of this is probably no demand. It's probably drift off here. There's nothing here to indicate that there is horrific supply in the background that's going to make this move into a bear market. The bars certainly look weak at the moment, but that's about all.
TLT, it's an ETF for TP. Okay. So he says, Tom, TLT, bonds have a tendency to go up when stocks go down. So stocks seem to have been hitting its head at all-time highs at resistance. So bonds would be a good position to have on for a potential healthy pullback in the indices. What do you think of that posture and the price action of TLT?
I like that comment, healthy pullback. Sounds like a good salesman for the upside. So this is a bond, is it? A derivative bond. Right, of course I never follow this, but I know that charts work. There's obviously supply there, look, on that bar. You've got a gapped up bar. There's probably no demand or something. There's supply there. It's gapped up. There is very high supply there. That's why it's come off, look. That would be no demand bar. You could possibly, Peter, draw a trend line through these two lows. Yeah, make sure it's down bar. And this one. That's right. And yeah, that'll do. Now, we've drawn the trend lines. I find it very difficult, really, to feel comfortable looking at a chart with no trend lines on. It's almost like the steering wheel of your car, and you've got a dirty windscreen. You don't feel happy with that. But here's clearly, it's trying to go up, look, slow trend up. You'd expect it to hit that lower trend line at least and bounce off that. But to do that, it's going to have to go down with low volume or stopping volume come in as it hits that lower trend line. I'm not certainly an expert in this. Philip Friston is. He's the boy for all these type of charts. Okay.
Comment here from John. Thank you, Tom. The background says it all. I have learned so much from you. Thank you, John. RIG, R-I-G, Peter, for Pete. Yeah.
That looks like a hell of an upthrust there, doesn't it? Wow. Here. I mean, only a weak market will have an upthrust like that. Trap up move. Well, the computer calls trap up move. It is an upthrust. That is a trap up move. They mark it up deliberately, knowing that the background's weak. Must be supply on that bar there, look. There it is. High volume. On that high volume, knocked it sideways. They're probably distributing there, selling. Then they say, right, okay, we're going to have an upthrust. We'll ram it up, catch as many stops as possible, mislead as many people as possible, thinking all that's now bullish, right, which it does. Don't forget, they do this because they know the reaction of what we call the herd to price movements in the market. They know that, like the story I say about the fire chief can clearly tell you what will happen to a crowd in a cinema or theatre if somebody rushes on the stage and shouts fire. They know what will happen. And professional money know a similar sort of thing. They know when they do certain movements what a high percentage of the crowd are going to, how they're going to react and behave. And they catch stops. That's why we say you should follow a particular stock, and if you put stops in, make sure that they're on odd numbers, because they're less likely to get triggered than an even number, because the herd tends to think in even numbers. Yes? Yeah.
So the best position on RIG is to short the rally for a continuation down to be in alignment with distribution.
Sorry, what was that, Rita?
The best position on RIG is to short the rally for a continuation down to be in alignment with distribution.
I would say yes. if this chart here, this stock here, it's highly unlikely to go up higher than this. If you see it up bar, no demand, narrow spread, that'll probably more likely come off. We do got a bit of strength that's appeared here, look. So you have to keep that in mind. But professional money make their money by deliberately whipsawing these markets around. I mean, imagine you've got your house and you keep ringing up the estate agent or real estate, whatever you call it, wherever you are, altering the price, but never accepting the price if somebody makes you an offer, right, which you could do if it's your house. And that's what they're doing. They're marking it up and down like this.
Leslie says it's an up thrust today so far.
That's a sign of weakness, up thrust. If it's an up thrust, it's a sign of weakness. So far. Yes, you have to be careful about calling these things. I pointed out earlier on, I made this embarrassing mistake. I said there was something was weak because it looked like an up thrust, but the up thrust was only halfway through. Of course, by the time it finished, it wasn't an up thrust. And what happened was, whenever you see, the old saying, tries to go up, tries to go down, closes in the middle. That means they're testing the market. It usually means it's bullish, still bullish if it wants to go up. If it's an up thrust today, what's the volume though? Is it high or low or what? Well, it could be no demand up thrust, which is quite possible. Keep an eye on that volume.
Paul is requesting GILD, G-I-L-D. It's a Nasdaq biotech stock. The daily and the weekly charts. G-I-L-D. Yeah. It's called Gilead, a Nasdaq biotech stock. Gilead.
Well, whatever it's doing, it'll trade in harmony with the index of Nasdaq. And it certainly looks as if it's reached an area where you're going to hit supply. There's definitely supply here, look. We got multiple red arrows, look. I always say to Gav, ignore the signals at your peril. And off it comes, look. And on that red down bar, there was looked like a bit of stopping volume, wasn't there? The market fell, a little bit more there, look. Well, there must have been stopping volume, that's why it went up, look. So there was some stopping volume here on these two bars after you've seen a bit of a decline, which makes the market vulnerable. But on saying that, there's not a lot of I mean, this is quite serious looking weakness here. Admittedly, you've got 1, 2, 3, 4, 6 down bars here, right, or even 5 there, right. So there was some buying there, look. But the reason why was that the NASDAQ itself has gone up. It's trading with the index. It now looks as if it's reaching a high, look, high point on no demand. This is highly unlikely to go through these tops here and through what looks like these trend lines, Peter, must be. Are they? Oh, right. Okay. I would say I certainly wouldn't be interested in buying this at the moment. Not with this. Up bars, lack of demand, look, very low volume, narrow spreads as it pushes up towards the previous area of supply, look. Now what's that, weekly? Now we look at daily. Right. That's the wrong one. I was just going to say, it looks a bit funny to me. 20 bars, Peter. Was pushing up as much as it can. I can't see anything obvious. It looks like a shakeout there, look. Here. There's not a lot of selling pressure. That's why it went up. Down bar, look. No selling pressure. Down bar, narrow spread. Very narrow, look. Volume very low. That's why it's going up, look. There's not a lot of selling pressure. That's why it looks as if it's got this. Of course, this bar hasn't finished yet. I don't want to make a mistake I did 2 days ago. It looks like enough, trust me. You've got to wait till that bar finishes. But the whole thing looks vulnerable now, doesn't it?
Okay. CL. Leslie's asking, have we analysed CL yet in real time? I think we don't have. That's oil, isn't it? Or is it? I think it's. You haven't got end of day up, have we?
I've updated end of day.
All right. Just one moment while we put this up. We can look at this. That's all we've got. Crude oil, CL. We've got it on end of day. So that was yesterday. Top. Yeah, that's crude oil. We don't have it in real time.
Yeah, okay, we don't have crude oil apparently in real time. But this is end of day up till yesterday. Right, now there was obviously a bit of supply in that bar there. But that's quite logical. See, it was pushing up through this top trend line. Yesterday was down. No selling pressure, look. So that oil looks as if it still wants to hold its own. In other words, it looks as if it could quite easily go up. There is a shakeout of some sort here, look. And of course something here. What did I say? Strength coming in. It's funny, these automatic signals. although you may get a few that may mislead you in certain charts, it's unusual if it hasn't picked the bottom one or even the top. Look. But the thing is, when that happens, are you geared up mentally to say, wow, look, buying, let's go in? You're probably hesitating. You've probably heard all the bad news. And you're probably saying, right, I think I better wait and see what happens. By that time, it's gone up here and it's put you off. That's a test, look. Look how low the volume is. That's definitely a test, look. That's why it's gone up. Hit that top trend line. There's no selling pressure today or yesterday. Okay?
GF or HE? Let's have a... Eleni, where could we find that? Is that on GFFC for you? Feeder cattle for Eleni. Oh, is that right though? Does that fit with your chart, Eleni, or is there something wrong with our data? Yeah, it does fit with Eleni. Yes, Tom, got anything to say?
Well, I'll just look at that. Looks like the end of a rising market. It's been gapped up, look, narrow spread. Volume is very high. That has to be weakness. What else would be? Now, feeder cattle, we traded this about 2 years ago, so we know it followed certain principles. But that certainly looks like what we would call end of a rising market.
Potential buying climax.
Yeah, it's the same thing. Buying climax is that people have rushed in on some sort of good news, right? I don't know what the good news can be on feeder cattle. Good cropping, whatever they eat, who knows? And they gap it up, but it's on a narrow spread, look, massive volume. That is normally end of what we call end of a rising market signal. And of course the market's vulnerable because you've got this substantial up move right behind you, look. Funny, I said to you, it's unusual. What's that saying? If these lows are not caught by these signals. What's that saying?
Basic test.
Testing, yeah. So it's interesting, isn't it? You've got this huge up move, look. That makes the market vulnerable to one or more groups deciding they want to start taking profits. The best way to take profits is to gap it up on some sort of good news. It's weak because the spread is narrow and the volume is high. That is a very weak market.
Okay, that's it. We've run out of time now, so that's it for today, and we'll be back next Friday, same time. And on Sunday this weekend, Tom will be doing his weekly newsletter. So have a lovely weekend and a lovely week, and we'll see you next Friday. Thanks. Thank you. Bye-bye.